Jonathan Schiessl, fund manager at IIFL Asset Management. He's joining us right now. Jonathan, thanks very much for taking out the time. Wish you a very good afternoon. Let's talk about the recent, change of sentiment, more risk-on appetite coming back into Indian equities. Do you feel that in the current standing with regards to what's happening globally, some macroeconomic data points that are improving globally, the risk-on sentiment will continue for a slightly longer period of time, and therefore one can look at picking up stocks even right now?
Yeah, I guess the key point to note is, up until this stage, up until very recently, foreign investors have not been big participants in this rally to any great extent. And therefore, this more recent sort of surge up that we've seen, we got the corporate tax news, market rallied, then we gave up 50-60% of the gains. Foreigners were selling into that. So the more recent push that we've seen, in the last week or so, seems to very much feels like a more of a global EM type rally. And obviously the moves in the dollar have certainly helped that. And obviously noise coming out from the trade talks has also helped that. So yeah, risk is on with that traditional time of year when it seems to be quite a good time from a historical perspective for markets to push higher. So yeah, I think it's probably less of an India story and more of an emerging market story.
I mean, we've seen, a few data points that have been coming out from China which have been encouraging, but the key question is whether there is enough of stabilization in the economic data that we've been seeing to support the excitement around emerging market equities.
Yeah, look, emerging markets has been a pretty torrid place for, nearly a decade. And I think the fact is, if you look at most emerging markets, not all, but most, we've been through a quite tough period, and there's been a lot of transformation, and a lot of the, if you like, the excesses that were in the system previously have been worked out. And China is probably one of those economies, which is another one where you could have said there was a huge amount of excess manufacturing capacity. But, the last few years have been very painful for China with the growth slowdown. And I guess to an extent, a lot of the excesses have been worked through the system. Sure, there's still problems. And you can look at other emerging markets and see a similar case. So there is a quite a good case, I think, for emerging markets here. And I guess the last hurdle that was needed to be crossed was global growth beginning to sort of look slightly better than US growth, or if you like, US growth coming down to global growth levels. And I think we've seen that more recently, and therefore the dollar's started to come off. And that's obviously another signal for emerging markets.
Particularly for India, Jonathan, now that we've been, we've got a situation where liquidity is ample and most central governments are indeed trying to make sure that this situation stays like this. Do you feel that for Indian equities, the earnings growth rate, the overall growth of about 6.1%, which the IMF had projected, that's still okay, and it should not deter anybody wanting to make investments into India?
The fact is, if you're going to be buying in India, you're not going to be buying it on the next 1 or 2 quarters of earnings growth estimates. Unfortunately, for many years, myself included, we've been calling a revival in earnings growth in India, and we've been disappointed for some time. But obviously what we've got now, what we didn't have before, we've got both government and RBI pulling in the same direction to try and get this economy going. Again, when you start looking at year-on-year comparisons, obviously because the economy was, starting to weak a year ago, that the data will start to get better. Obviously, from an earnings perspective, we still require a bit more patience. The slowdown has been brutal, and it takes time for it to show back up in the numbers. So, if you're going to be looking to buy India, it's not because of what's going on the ground today. It's more a year or 2 ahead is the story you're looking to sort of position for. And from that perspective, things should be better.
Right. Jonathan, in your opening remarks, you said the FIs have not participated so far, and we've seen at least, some sign of hope returning back to Indian equities was the month of October, where the flows are looking much better compared to the last 5 months that we've seen now. Post-Fed cutting rates once again for the 3rd time, now do you see more of allocation from the FIs coming to the EM basket, and within that, will India be a beneficiary?
Yeah, so I think you're right. So I think any uptick in EM buying will obviously filter down through to India to an extent. I think, though, you have to be cognizant of the fact that there were quite a few investors who were hiding in India for their EM allocations. Obviously they were probably wanted something in EM, didn't want to play China or the other emerging market perceived exporters. And if we do get some sort of trade resolution, you could possibly see some of that money moving out of India back into other emerging markets. But I think overall, when you look at the macro backdrop, India looks quite attractive. The issue in the short term is obviously there's quite a bit priced in. Markets are pushing up to sort of near all-time highs, and yet growth is obviously near a sort of multi-year low.
Yep. Jonathan, if India is attractive at current levels, if somebody wants to put fresh money now, which are your favorite sectors?
Yeah, so it's an interesting, I think like many other indices globally, there's a few stocks that have held up a lot of the mainline indices. And India is no different. There's 4 or 5 stocks which have pulled the index up, kept it flat. You look outside of those big quality, if you like, blue chips, and the market's been pretty miserable for some time. So I think, there are pockets of value out there. We would still advocate a balanced portfolio. So I think, yes, it looks like the dollar's going to weaken off again, and probably that wouldn't be great for Indian exporters like the IT or the healthcare sector. But, we always quite like having a sort of natural rupee hedge in place. So underweight to IT, but still have some exposure there. But obviously our sort of main focus would remain on the domestic side. We're still very much overweight financials, have been for all the way through for some time, and still it's a big overweight of ours. Industrials as well remains a reasonably large overweight as well. And I think there are pockets of value that are still there in perhaps some of the consumer discretionary areas, which have seen real pressure more recently. So there is interesting stuff out and about there. And I would also include some of the mid and small cap names. I think people are looking and want to allocate to that part of the market. I guess the issue in the short term is probably liquidity.